Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday the 19th of May, and we had a great week for stocks. The semiconductors led the way with 8.5% gain this week, just a huge week, and it was really an obvious place where they broke higher from. Let's take a look at the charts and make some sense of it. Let's start with the weekly time frame of the S&P 500 because we've seen a pattern that has been emerging that is now confirmed. We have a higher high on this weekly time frame along with the higher lows that we've seen. So, and that is with them above all the rising 10, 20, 30, and 40 week moving average. So buyers are clearly in control. They have been for a little while. And most important, there's been some great action in the individual names. The NASDAQ on the weekly time frame also in a clear uptrend. I don't know why it's taking a little while to show, but there it is. As we broke another level of resistance recently, and we continue to ride the way we're supposed to early in an uptrend on the weekly time frame. We rise along the 10-week moving average. Then, as pullbacks to the 10-week moving average get a little bit deeper somewhere down the road, we'll see that maybe something like this happens. It hits the 20-week moving average, etc. Now, that's assuming this market continues to move higher. For now, we're going to give the benefit of the doubt to the buyers because we're above a rising 10, 20, 30, 40-week moving average, and we have a very clear pattern of higher highs and higher lows. What would change that is if stocks obviously go down. If they go down and break down, well, then that changes the story. But for now, it's innocent until proven guilty. So let's look at the two time frames together. Here on the left is the daily time frame, and on the right is a 30-minute time frame. Each one of these candles represents 30 minutes of data. We saw a break. I had pointed out on Twitter an oval that kind of looked like this, and this is where we broke free of that. And at that point, I said, we're on our way. This should go to basically the height of this pattern. The height of this pattern, 408.5 to 414.5. That is 6 points. We add that to the break point of right here. Some people measure it from the top. If you were measure it from the top, that would give us what did I say, 5.5 points, 419.5. So it exceeded the bullish projection. And that doesn't mean, when you give a projection like that, it doesn't mean that's where you expect it to reverse. That's where you look to say, here's where it has the potential to go in the near term, so keep that in mind. What we have on this 30-minute time frame is a very clear pattern. We have this higher high, and then we had this low. We had another higher high and a higher low, higher high. And if we're going to maintain this near-term upward momentum, then it will look like this on Monday. Or if we break down, no big deal, but it'd be a good time for a swing trader to take some profits. And then perhaps we come down towards that 5-day moving average and reset up. And then if that were the case, we would want to set an anchor to this peak and see that the buyers would gain control. If, when the buyers regain control above that, it would confirm that they have taken control, and we could buy it there with a stop under whatever this higher low is. Not to get too far ahead of ourselves, but I was saying that just so I could talk about this semiconductor index. And this is the level that I've been talking about, the anchored volume weighted average price from the high that was made in April. We can see that there was supply, that the sellers came in at that level several times after it backed away from it. And then it hit it here. Well, at this hit, we had, an initial low. It ran up, but it had that higher low. Then it had another higher low. This is the precise place where the buyers regain control. That's right here on the shorter term time frame. That's where it made sense to say, hey, I want to get involved with a stop under here. And then as it makes these higher highs and higher lows, we raise our stops up under the successive higher lows. Now, it seems likely that maybe on Monday it'll break below this. It doesn't mean it has to, but it seems likely to me. Maybe we catch up to let the 5-day moving average catch up, and then perhaps we can go look at that weekly time frame and say, all right, now it looks like the buyers are going to be able to continue to move this market higher up to perhaps this level. So we just look at these levels and say it's a potential stopping point along the way. We're in an established uptrend, but we don't want to be buyers, after these moves. You don't want to buy, you can make money on the breakouts, but you don't want to buy the dips, because buying the dips, where do you buy it? 128? Well, you had to ride it all the way down to 119 and you had to wait 4 weeks. Instead, if you buy as the buyers regain control above these little areas and where the buyers are clearly back in control with the anchored volume weighted average price, that gives you an advantage to say, now I know with 100% certainty the buyers are back in control here. I can buy here with a stop under there and repeat that process on whatever time frame it is that you're engaged. But right now, we've seen that uh, this rally is a little bit more mature than the Nasdaq itself because we had seen tests of the 10-week, then the 20-week moving average. So maybe it's more like this. And I mean, I'm not here to make predictions. I'm simply here to say we have a pattern of higher highs and higher lows. That's called an uptrend. A trend once established is more likely to continue than reverse. So I'm going to give the benefit of the doubt to the buyers and assume that it's going to continue to move higher, but I'm going to have my stops in place in case the market proves otherwise. Micron was a great example, and I explained this to subscribers in a Monday night video, which I had then made public Tuesday morning on Twitter, and that was to say, I was anticipating a break of this anchored volume weighted average price from the all-time high because we had seen more repeated tests of this resistance. We had seen these higher lows develop and the energy was building. So my purchase was over in here at 64.20, I think it was, right on this day as it got back above. It pulled back just the way I wanted it to. It pulled back to the prior day's volume weighted average price and began to rally. So I purchased there with a stop under here. Later, the next day, I sold some on strength. I got stopped out of a little piece right here today, and I've got 1/3 left. That's my time frame. That's how I trade. Longer term, if you're an investor, you might be thinking it can go up to here, and I would agree with you, but that's not the time frame I trade on. So just as we saw with the semiconductors, where the buyers took control as it broke back above that volume weighted average price, similar to where they took control with 100% certainty right here in late 2021 as it got back above that volume weighted average price. This is something I wrote about extensively in my book, Maximum Trading Gains with Anchored VWAP. If you don't own that yet, go look at the reviews on Amazon. And I'm not here to sell you, but I think it'll help you a lot, and a lot of people would agree with that based on the reviews on Amazon. The Russell 2000 just continues to be garbage. I've been talking about this one to subscribers, saying maybe it's going to make it up to 180. But, if you were trading the break yesterday, I said I had no interest in trading the break because we still have a declining 20 and 50-day moving average. Well, today we gapped up, and that was an opportunity for sellers to say, I'm waiting to get out of this. This market is garbage. It's still stuck in a big, long range. If they didn't scare you out, they are certainly wearing a lot of people out. We're at the midpoint of the range over the last year, and truthfully, I look at this market and just see a complete waste of time. I look at it and say, why even bother trying to make sense of something? I want things that are obvious. I want to buy the semiconductors when they break above this level right here where we know that the buyers have regained control, because on average, the every long who had purchased on the wave down is now making money. On average, the shorts involved are now losing money, meaning buyers are in control. That's where I want to get involved. I don't want to buy pullbacks. I don't want to buy breakouts. I'd rather sell some at the breakout and be involved at 125 and sell some at 130, 132. So that's the way I look at these things. The biotechs are, we pointed this out a couple weeks ago, same exact story. Where did the buyers definitively regain control? Right here. They got back above the anchored volume weighted average price from the beginning of the year. That's this purple one right here. And above the anchored volume weighted average price from this peak. And we saw that as the market worked through this source of supply right here at 82, this was where the buyers regained control. So you buy there with a stop below the most recent relevant high or low. As it makes a new high, you set your stop under here. As it makes a new high, you set your stop under the prior low. As it makes a new high, over here, your stop goes there and stopped out. Now, we know that this is an important high right in here on this gap, so we set an anchor to that. And today we recaptured that. So we're back above that. The 5-day moving average is flattened out. So what does that tell me? It says, on average, since that day right here, the buyers are back in control, and that's for the week. So maybe next week buy above here with a stop under here. That's certainly one way that I'm looking at it and considering a trade in the biotechs, because looking at the longer term time frame, let's get rid of all those arrows, perhaps we can make it back up to the high end of this range, and then we can continue to perhaps build. I would think if it breaks out from here, it's most likely going to fail because it's already rallied from 72 to 92 at that point. So it's all about, where's the market come from? Where does it have the potential to go? All these semiconductor stocks had a great week. AMD, huge week in here as well. All of them are looking good. Shopify is still looking like a good stock to own. Potentially, I haven't purchased it yet. When we look at this, was the earnings report gap, and it's been a nice orderly pullback so far. We're back above the anchored volume weighted average price from the all-time high. So we know from the highest point ever paid, the average long participant is making money back above this level. From the highest point shorted, the average short over the last year and a half is losing money. So when we look at the two time frames together, this is what we're looking at. Same story. We've got the month to date volume weighted average price that's, let's just clear this up. That's the week to date. We'll put an anchor off of this peak because we know that's been important, because that was the high. And we didn't know it was an important high till really over here. So, we set that anchor and then we see how it reacts to that. Well, with a declining 5-day moving average, I always say I don't want to be a buyer with a declining 5-day moving average. So instead, what I want to see is maybe something like this. Monday it does this, Tuesday into Wednesday, and then maybe it does, that 5-day moving average flattens out. I would then put an anchor at this point and see if that anchor starts to support the prices. So then I would want to be a buyer either here or most likely right here. And I would set my initial stop under this level. And as it breaks out, then I would raise my stop under here. This is what I do for subscribers to Alphatrends every single day, is talk about the stocks that are setting up. Stocks like Vroom that we purchased over here, and this morning right on the open, we sold a third because it was breaking out. And that was a smart place to take a third, not just because it failed there, and I'm not calling it an outright failure, but because it allowed me to take that third off and say, now I'm reducing my overall risk. Allison, I put this one out for subscribers as well that were long, and I put it on Twitter. Both of these I put on Twitter. I put ARRY on Twitter as well, and same story. We sold some this morning on strength, and that was a good thing because it gave back most of those gains. We've still got a 2/3 position, but this is the way you want to be looking at stocks and trading stocks. Thank you for tuning in. Have a good weekend, and that's all.